Hello, good morning everyone. So thank you for joining our section today. So every one of you are doing well. So my name is Shireen from Apex Securities Berhad and I will be the MC for today. So during the live sections, if you have any questions, please to type them into the live box and I will address the question during the Q&A session at the end of the sections. So as usual, I need to emphasize on our risk disclaimer, where this presentation has not been reviewed by Securities Commission Malaysia as is provided to you solely for general information and does not constitute any recommendations. We are not liable for any losses arising based on these information. So investments are subject to investment rates, therefore you shall seek for advice from quality advisory before making any investment decisions. So just an update for the products that our company offers. We are offering futures and securities products. While for futures, we cover products in Malaysia and different exchanges such as Singapore Exchange, CME Group, and Hong Kong Exchange. While for securities products, we are offering locals, SGX, Hong Kong, Australia, and Thailand Exchange. So let's welcome our invited speaker for today's section, which is Kenneth Leong, Head of Research of Apex Security Berhad. So I'll pass this session to our speaker, which is Kenneth. Okay.
Okay, good morning everyone. I'm Kenneth, the Head of Research of Apex Securities. So today's topic will be the second half market outlook. Title is Navigating the Steady Upward Wave after we have ascended sharply higher in the first half of this year. So the agenda for today is firstly we'll go through the global markets review and outlook, followed by the Malaysia's market review and outlook. Next we'll move on to the Malaysia's economy review and outlook. Then in the second half of the session for today, we will have the second half market strategy, topics, and also the technical review and outlook.
Okay, so there is some questions for this. How will you think that how the market will be performed in 2024?
In the first half of 2024, global equities were generally positive, driven by optimism surrounding the prospects of US rate cuts. Gains was also largely underpinned by the stability in the corporate fundamentals, while the global economic growth remained steady, continued to power the markets higher. Overall, in the first half, both the Dow Jones and the S&P 500 finished by about close to 4% and 14.5% higher respectively. Following the stellar performances, we gather that valuations are hovering near the fair levels, with the S&P 500 trading at prospective PE of 22 times for 2024 and 19.8 times for 2025 respectively. This is close to the historical average of 23 times. Regionally, in the first half, Asia Pacific stock markets performed mostly fairly upbeat. This is led by the Japanese equities that built onto their last year's rally. On to the neighboring countries wise, the Jakarta Composite Index fell by about 2.3%. Stock Exchange of Thailand slipped by 8.1%. So FMKLCI has slightly outperformed the regional markets. This is the performance of the selected global indices. As you can see that in the MSCI World Index, in the first half, we are seeing about 10.3% gains in the first half, which has outperformed the performance in the Dow Jones, FTSE, the DAX, and also CAC. While the overall in the Asia-wise, we noticed that Japanese equities has built on to last year's rally. In last year, the Japanese equities gained by about close to 30%, and during the first half, we are seeing another close to 20% of gain. On Hong Kong wise, we are seeing a recovery after a sluggish performance in last year, but in the first half, we are seeing about 4% gain during the first half of this year. On the regional market-wise, the FMKLCI has outperformed, rising by about 9.3%. This is compared to the Singapore Stock Exchange, which has rose by only about 3%. Jakarta Composite and the Stock Exchange of Thailand has closed in the negative territory in the first half of this year.
Okay, so just a question from my side. So following the strong performance delivered by the Malaysian markets, can we expect the possibility to sustain moving into second half of the year?
Yes, for the outlook-wise, we think that gains were likely to be supported by earnings growth prospects. Moving forward, consensus are pointing to earnings projection of about 7.9% year-on-year growth in this 2024. Despite growth on the cards, consensus have been cutting their growth rate compared to the earlier projection during the end of 2023. During the end of 2023, the consensus are pointing for about 10.5%, but it has cut to about 7.9% for 2024. At the same time, there are also concerns over the US presidential election, which may trigger renewed volatility for months ahead. Historically, there were no clear conviction over the past historical trends of selected market performances before the election date. However, we noticed that markets generally outperformed in the mostly positive manner post the US election, with the exception of year 2000 and 2008. We recall that in year 2000, markets were impacted by the dot-com bubble crisis, while in 2008, the markets was impacted by the subprime mortgage crisis.
Okay, so is there any correlation of the trend during the election period?
Yes, if you look at this table here, this is the historical US pre- and post-presidential election. This is the selected market performance before and after. You can see that before the US presidential election, historically, there are no clear conviction of the market trend. There's like years of ups and downs. But in 3 months after the US presidential election, generally the markets usually outperforms by then. If we strip off the 2 years, which is the dot-com bubble crisis in 2000 and also the global the subprime mortgage crisis in 2008, you can see that the MSCI and Dow Jones generally outperform. This includes the FM KLCI as well. These are some of the key dates that we can watch out for the US presidential election. We have already gone through 2 key dates, such as the 27th of June, the first US presidential debate. We gathered that post the first debate, Republican is holding a slight advantage at current point of time. Joe Biden did fairly poorly during the first debate. He was unable to address some of the questions posed by Donald Trump. He has been taking like mild pause in between, as well as displayed signs of weak body language. Basically, investors are echoing concerns that Joe Biden's age is playing catch up, and he may not be well, or he will not be fit for the person to lead the role. But either way, which parties holds the presidential the place, we think that, or the White House, we think that both the infrastructure and also the defense sector will be the clear winners. For example, if Democrats were to take hold of the White House, it will be likely to be a negative onto the traditional energy, and is positive towards the renewable energy. So Joe Biden has been encouraging market players to move on towards the renewable energy section, and vice versa.
Okay, so there's another question from my side. So with no rate cut took place in the first half of year, why are you tax moving into second half of 2024?
Okay. In terms of rate cuts, consensus are pointing only for one rate cut in 2024. This has trimmed from a 5 rate cut projected during the end of 2023, and also 3 rate cuts projected during the March of this year. But until towards the end of the first half, the consensus on the markets are pointing to just only 1 rate cut. For now, we reckon that rate cuts are likely to be on the table in 2024, but the pace of the rate cut will likely to be very much gradual and measured moving forward. So as we move on to the second half, this is a table of the next 4 FOMC minutes meeting for the 31st of July, which is next 1 to 2 weeks period. We think that there will be no rate cut during this period of time, given that economic data are still fairly solid, with recent inflation readings still far-fetched from the US Fed target of 2%. For the month of September wise, for the next FOMC minutes wise, we expect for potential rate cut, given that inflation may have really tapered towards near the Fed target of 2%. Based on current or based on the last channel checks, 93% of the consensus or the markets are pricing in for the one rate cut in the month of September. For the month of November wise, we think that there will be no rate cut, given that the timing of the FOMC minutes or the FOMC minutes meeting are too close towards the US presidential election date. But for the month of December, we think that there could be also another rate cut, given that inflation could have tapered towards near the Fed target. But in the event that the rate cut would happen in the month of September, then we think that chances of rate cut in the month of December will likely to diminish. For now, forward valuations are still fairly decent, trading at slightly below the long-term forward historical average. Regional wise, we expect choppiness to persist as China continues to grapple with the property sector slump. Thailand is still struggling with the economic reformation following the appointment of Prime Minister Srettha Thavisin, which took over in August last year. So he has quite a lot to do for the economic reformation. While Indonesia's political landscape is also uncertain ahead of the probable Subianto appointment as the newly elected president that will be taking over the ever-popular President Joko Widodo position in the month of October. If you recall that back in 2018, back home in the Malaysia landscape-wise, when there's a change of a government from Barisan Nasional or UMNO-led Barisan Nasional towards the Pakatan Harapan, we did see the markets see a negative knee-jerk reaction. Most of the contracts are being public mega infrastructure projects are being reviewed or being cancelled. A lot of government-related linked stocks are tanked. So this is quite similar to the situation in Thailand at this point of time.
Okay, so we did notice that actually the IPO subscription are over the roof, particularly in the recent months.
Okay, on the review-wise, we did see that FMKLCI has delivered a decent performance, marking a 9.3% gains in the first half and is hovering around the 1600 level. Gains are mainly underpinned by utilities giants such as Tenaga, YTL and YTL Power. This is riding onto the AI development and supply chain. Onto the IPO, onto the market-wise, we did see that generally when foreign funds has come into the Malaysian market, when there's a green bar, traditionally markets outperform, but when the foreign funds have access to sell Malaysia equities, this is during the COVID time, we did see the FMKLCI has tanked. On to the IPO wise, we think that IPO launches are on track for 42 in 2024. This is in line with Bursa Malaysia's target. At present, in the first half, there are 19 IPOs being listed on Bursa Malaysia. Generally, most players would want to list at this point of time, taking advantage of the vibrant trading dynamics as well as the richer valuations. This is some of the Bursa Malaysia's sector performance. Leading the gains was the construction sector. This was powered by the influx of the data center projects, followed by the utilities companies, which is also riding onto data center related. Property sectors are also taking a slice of it, as most of the land transactions are mainly for industrial properties. We did see only the plantation sector underperform, given that the CPO prices continues to hover below the 4,000 per metric ton level.
Ni hao, may I know what is your thought for the Malaysian market in second half of the market of this year?
Okay, moving into the second half of this year, we think that markets may expect to see some choppiness or volatility in months ahead of the US presidential election, but markets may turn calmer after that as the focus will likely to shift back towards the economic and corporate fundamentals performance. This is also accompanied by the usual year-end window dressing activities. We expect the lower liners to remain in focus as well as amid rotational play amongst the selective sectors. Investors will be keeping a close watch onto the details and the timing of the blanket subsidy removal of RON 95. For now, we think that the RON 95 subsidy removal will likely to be a gradual and likely to be tabled towards the budget 2025. Also, we expect ringgit to gain ground as the economic growth remains largely on track, supported by the execution of key economic blueprints, as well as there is clearer signs of timing over the interest rate cut. Already, I think on yesterday or the day before yesterday, Malaysia has reported the preliminary second quarter GDP numbers rising by 5.8% year on year. This is the highest since fourth quarter 2022. As we move towards the end of the 12th Malaysia Plan, we expect development expenditure remains similar as budget 2024, roughly around 90 billion for budget 2025. These are some of the expected measures outlined under budget 2025 that provide our own in-house view. We think that energy transition will likely to be accelerated under the National Energy Policy, targeting 31% RE installed capacity by end 2025. This will likely to boost the solar related players or renewable energy related players. The strengthening of Islamic capital market development, gearing up of tourism related sector as we head towards the Visit Malaysia year 2025. So I think moving into the second half of this year, I think a lot of projects will skew towards the tourism related activities. There's also 100% internet coverage in populated areas. This will likely to benefit telco players, targeting 2.06 hospital beds per 1,000 population. This is compared to currently we only have about close to 2 hospital beds per 1,000 population in last year. So hospital players may likely to be aggressive in their expansion. Strengthening of public transport network will likely to benefit construction players together with the flood mitigation projects as well. We think that despite the FMKLCI has delivered a decent performance in the first half, valuations are still fairly attractive in terms of price to earnings and also price to book multiples compared to the historical average. Our in-house year-end target for FBM-KLCI is at 1650 and 1720 respectively. This is based on the PE ratio of about 15 times, which is in line with historical average. This is the chart outlining the FMKLCI performance against the PE multiples. If you look at this chart, before the COVID time, back in 2019, the FMKLCI performance has been hovering just within the long-term historical average, which is at around the 17 times. But we did see a sharp dip in that before it bounced sharply higher, and subsequently we did see valuations has been hovering above the middle of the PE band, but until the middle of 2021, we did see that there's a gap in terms of the FMKLCI performance as well as the valuations. So we think that with this gap taking place throughout the past couple of years, close to about 3 years, there could be still potential upside for the FMKLCI to play catch up towards their fundamentals. Looking at the Malaysia Economic Review and Outlook, we can see that in the first half we did fairly well, or even in the first quarter itself, we did fairly well with the Malaysia economy rising by 4.2% year on year in terms of GDP growth. This is compared to 2.9% year on year growth recorded in the fourth quarter. As we mentioned earlier on, in the second quarter, the preliminary results that was released on yesterday afternoon showed a 5.8% year-on-year growth. This is the highest since the fourth quarter. So Malaysia's economy is largely on track for economic growth. and this remain likely to continue to attract the foreign direct investment. In 2023 wise, economic growth was primarily supported by the services sector, benefiting from the higher household spending, heightened tourism activities following a surge in tourist arrivals, and the manufacturing services was largely supported by the recovery in the E&E sectors. Malaysia inflation rate rose to about 2% year-on-year in the month of May. This is driven by the increase in overall core inflation, excluding fresh food and government administrated prices, which remains steady at 1.9% year-on-year in the month growth in the month of May 2024. Malaysia's trade show robust performance with a 10.3% year-on-year growth to about 250 billion. This is driven by about 7.3% increase in the exports, mainly from the E&E sector. For now, Malaysia has become the preferred destination for foreign direct investment, attracting major commitments from tech giants such as Google, Apple, Microsoft, ByteDance, and BlackBerry. I think some of the attraction is because the government has been loosening up their economic policies to attract more foreign investors to set up their manufacturing or set up their premises in Malaysia, as well as the attractive land. Well, the valuation of the land in Malaysia is still very much low compared to neighboring countries like Singapore. There's also the Johor Singapore Special Economic Zone JSEZ, which aims to attract multinational companies to Johor, supported by initiatives including the Investment Malaysia Facilitation Center and the QR code based immigration clearance. Although we see that this QR code is still very much at the infant stage, there's still a lot of long queue during the immigration between Malaysia and Singapore. For the enhancement of the regional connectivity through projects such as CLEO's Singapore High Speed Rail and also the Kemas Johor Bahru Rail, aim at achieving the nations in 2030, we will likely to continue to buoy the sector in Johor region. This is some of the economic key indicators of the economic growth, supported by the recovery in the private sector, whereby the nominal wages has been showing signs of improvement. This suggests that there's higher disposable income for Malaysians. But however, in terms of real wages wise, we are seeing a slight dip. This is due to the inflationary pressure taking shape. At the same time, for tourist arrivals wise, we are seeing a recovery in the tourist arrivals, and the numbers may likely to hit the pre-pandemic levels at around the 25 towards the 26 million mark. As we gear up towards the Visit Malaysia year 2025, we think that the number of tourist arrivals will likely to see improvement as well. The improvement in the Malaysia's economy was also supported by the improvement or the stability in the unemployment rate data, which is projected to remain stable at 3.1 towards the 3.3% for the whole year of 2024. Some of the other supporting measures in terms of private consumption will be the EPF account withdrawal and also the salary hikes for civil servants. These will likely to boost up private consumption spending for the remainder of the year. Some of the risks that we have seen will be the inflationary pressure from subsidy rationalization, as well as the SST tax hike. So I think moving into the second half of this year, all eyes will be focusing on how or when will the RON 95 subsidy be eliminated, or the blanket subsidy will be eliminated. For the GDP wise, our full year in-house 2024 GDP growth is forecasted at 4.1% for this year, which is in line with the Bank Negara's number between 4 to 5% for 2024. Some of the additional market insights for the second half of 2024 under the economic outlook will be, for the inflation wise, we expect inflation, which has hit 1.8% in the first half of this year, will likely to be driven by higher water tariff and services. That was driven by the higher water tariff and also services taxes. But moving into the second half of this year, the inflation is likely to rise further due to the diesel subsidy rationalization. So in coming months wise, we expect some small uptick in the diesel subsidy resignation, and also the anticipated RON 95 blanket subsidy removal. Our full year 2024 headline inflation is forecasted at 3.2%, which was up from 2.5% for 2023. We are expecting reasonable single-digit growth in Malaysia's external trade for the second half. This is largely supported by the improvement in the electronics and electrical industry. The forecast is also aligned with Bank Negara's expectation of 5% increase in exports for 2024. This will be driven by the recovery in the global trade recovery, economic resurgence in China, although it's still battling with the property slump, and also the geopolitical tension and also high interest rate environment. For currency-wise, we gather that the Malaysian ringgit has depreciated by about 2.6% against the US dollar in the first half, but however it showed a relatively stable performance compared to the regional peers like in countries like Indonesia or Thailand. Moving forward, we anticipate the ringgit to gain some ground in the second half of this year, supported by the expected stronger current account surplus, FDI inflows, export recovery, and the potential US Fed rate cuts. So if US Fed were to reaffirm their stance over the rate cut moving into potentially the month of September or December, we think that foreign funds will likely to continue to remain supportive in Malaysia's market. For the monetary policy forecast wise, we are projecting but Bank Negara will likely to maintain the OPR rate at 3% throughout this year, given that there's no change in economic fundamentals at this point of time. Malaysia's economic growth remains well on track for 4 to 5% growth outlined by Bank Negara Malaysia. This also reflects the resilient domestic economy and also the ongoing inflationary pressures.
Okay, so thank you for the sharing from Kenneth. So now we will take a 2 minutes break, and in the meanwhile, we will come back here with the Malaysia's top stock pick for your information. So now we were going for the short break. Okay, so in the meanwhile, I'm going to make some announcement for our company updates. So first, we have changed our online trading platform links. So this is the links that you guys can visit in our website for future use. Next is we have launched our new mobile apps. So this is the name for the mobile apps. So if you want to remember it more clearly, you can just take a snapshot for this, and then after the section you can just go try and download our apps, try and download our mobile apps, or visit our website for more information. Lastly, there is another last announcement, which is we are offering the discretionary futures tradings. So for more information, you can visit our website for more info. So we will take a break for another minute. After that, we will come back with our Malaysia stock pick sharings from Kenneth. Thank you. everyone. So now we will continue with the Malaysia's top stock pick, which is by Kenneth Leong. But before that, we have another new joiner, which is our latest speakers, which is Megan Wong, head of derivative from Apex Securities Berhad. Later, she was sharing more on the derivative trading analysis. So now we are going to pass this session to the Kenneth for his Malaysia top stock picks. So now I have one question for Kenneth. Okay, so how should investor positions their portfolio moving into the second half of 2024?
Okay, moving into the second half of 2024, we think that after a strong start in the first half, we are turning slightly more defensive and selective for the second half. Key focus will be on two stocks that could demonstrate earnings resiliency in terms of earnings performance, as well as sectors that are riding onto selected thematic plays. The FM small caps run may also take a breather after a strong rally. This is to allow recovery for fresh legs before marching higher. Okay. Just a brief recap in the first half of this year. Generally, I think we did pretty well for in the first half of this year. Our portfolio on average has outperformed the FM KLCI of 9.3% and the FM small cap of 18%. We have raked in about 23% gains. While in terms of the dividend recommendation wise, we also have been outperforming, rising by about 14% for the dividend stock picks. Generally, in the first half portfolio, there were two underperformers. Firstly is AME Elite Consortium Berhad. We think that the new avenue of growth will likely to be the development of the new industrial park in Penang, but contributions will likely to kick in 2025 onwards. Meanwhile, Legenda, the share price did pretty well in the first half, but until there was a negative news that has impacted their share price following the arrest of the managing director, Dr. Jimmy Do, to assist on the MACC investigation in regards to the land deal. So that has impacted the performance, but nevertheless, Legenda still closed on a positive note by rising by about 0.4%. Hopefully, in the second half of this year, our performance can replicate the first half performance. Moving into the second half, these are some of the sector outlook that we are overweight and are neutral onto. We are overweight onto the construction sector that is riding onto the data center boom and also public mega infrastructure projects. If you recall, in the first half, most of the order book replenishment from construction players were largely derived from the data center related projects. But moving into the second half of this year, we think that the rollout of the public mega infrastructure projects will likely to shift into a higher gear, particularly post the budget 2025. Our topic is AME Elite, target price of 195. For the property wise, we are also overweight onto it following the recovery of the sales. And while demand are skewed towards affordable projects, we like companies that have strong land bank and also historical take-up rates. We are favoring into companies that are building in a township that is more sustainable, like Matrix, with a target price of 2.14 cents. Under the transport sector wise, the sector will be benefiting from the trade diversion and steady economic performance. We like Westports and also Tasco. For renewable energy, the sector is riding onto the government-led initiatives under RSS 5. We expect the new wave of order replenishment to take place soon. Our topic is SolarWest and also Semiden. We are neutral onto plantation, telco, technology and consumer. For plantation wise, inventory is expected to expand when the peak season commences moving into subsequent months. Telco will continue to battle with the intensifying competition, and while valuations are turning fair at this point of time. Still, we have a topic of Maxis with a target price of 4.28 cents. The technology sector will ride on to the recovery in semiconductor demand, but the consumer-driven chips outlook remains challenging at this point of time. Our top pick is QAS with a target price of 85.5 cents. For consumer-wise, we expect cautious spending to persist, particularly post removal of the RON 95 blanket subsidy. However, we think that the government will likely to adopt gradual or measured stance, maybe a 10% or 20% cut in the subsidy until a full removal. So the construction sector will be anticipating more aggressive rollout in private and public infrastructure jobs as buildings shift into higher gear moving into the second half of this year. Property sector will be well positioned to capitalize on the development of mega transport projects, particularly in the region of Klang Valley, Penang, and also Johor. Technology sector will likely to remain in focus in view of the recovery in the world's semiconductor sales, leveraging on the rise of AI industry, cloud computing, and IoT. The healthcare sector, particularly glove players, which saw fortunes turning around with majority of the players returning to the black, while healthcare services providers and equipment manufacturers stands to benefit from the larger allocation under the recent and upcoming budgets. So for budget 2025, we expect the healthcare sector to remain one of the largest beneficiaries, while the glove sector, not just our own in-house view, the consensus are also upgrading their calls in the gloves related stocks. We think that the worst could be over for glove related stocks and the recovery will likely to take place. However, recovery will likely to be very much gradual and measured, probably until the demand supply equilibrium takes place towards the end of 2025.
So this will be a good news for Top Glove?
Yes,
Older?
I think
after a great suffer.
I think we are already seeing a recovery in terms of earnings performance in most of the gloves related stocks. Most of them are already returning into the black, moving into the first half or the first quarter performance in terms of earnings. So we think that we may be seeing sequential earnings recovery moving forward. However, earnings will likely to be very much gradual and measured at this point of time.
Okay. Well, how do you see? Recently there are a lot of people talking about data center. So is that the one that will promote construction and property side of the market?
Yes, I think that the property and construction sector will continue to be one of the biggest winner under the data center related team. Data center related team is also one of our top picks in our top calls in the first half of this year and also moving into the second half of this year. So we think that construction players and also property players, although share prices have really appreciated very much in the first half, we think that there's still room to growth supported by the improvement in fundamentals.
I see. So Matrix is the one that you recommended just now, right?
Yes.
Okay. Good news for Top Glove though.
Yeah. We also like the renewable energy sector that's riding onto a slew of incentives outlined under policymakers in recent years, with the government targeting 31% RE capacity by 2025. The tourism sector also may take off as the nation prepares to visit Malaysia year 2025. We think that airlines or even REITs that's focusing on to retail REITs such as your Sunway Construction REIT, your IGB REIT, which is Mid Valley, you have Pavilion REIT, which is Pavilion in KL. And also these are some of the key team plays that we can watch out for. As mentioned, we also like data center supply chain players leveraging onto the AI and cloud computing. We think that not only construction players, the supply chain, for example, your cable manufacturers, your electricity players will likely to stand benefit from the data center play. So this is a strategy for the second half of this year. It's actually pretty much similar as compared to the first half of this year, but we have add on logistics and also tourism. So we like logistics following the recovery in the external trade, mainly from the rebound in the E&E sector. And also most of the players are ramping up their capacity, including Westport as well. Tourism will ride onto the Visit Malaysia 2025 but before that, in the second half, I think most of the players are really gearing up towards the year 2025. For the second half, our top picks would be AME Elite, Matrix, QS, Westport, Tasco. This is a snapshot of our top picks, and most of them promises more than 20% potential upside moving into the next 12 months.
So anyone need to screenshot that?
Yeah, in the meanwhile, I think there's one question from one audience. So she was asking that what type of infrastructure project in Klang Valley will take place and which company will be benefit in it?
I think that the infrastructure in Klang Valley will be probably the flood mitigation projects and also the Klang Valley MRT 3. For Klang Valley MRT 3, the biggest beneficiary probably will be Gamuda, given their historical track record having completed the past MRT projects. Some of the other players will be your supply chain like precast concretes like Kim Lun Corporation Berhad. You have your piling players like Econ Pal, Advanced Con, or even Pintaras Jaya, or you can have other work infrastructure related companies like IJM, MRCB, or even Sunway Construction.
Wow, there's quite a number of list of the company. Yeah. So another question. So there's one audience is asking that is it still safe to hold their stocks in the technology sectors?
I think that is still fair. In Malaysia's context, we think that valuations for technology-related players are still not as overstretched as companies listed on Nasdaq or on the Wall Street. So we think that there's still potential upside to hold on to or buy onto technology-related players. We think that earnings growth still remains on the card at this point of time.
Wow. Okay.
Any topics for
Technology stocks.
For technology stocks, I think if you look at this table, we have companies like QS Group Berhad is currently as of 28th of June and end of first half is trading at close to 70 cents, and our in-house target price is at 85.5 cents, promising about close to 23% upside for this.
Wow. Okay, so such a good sharing. So hope you guys get your answers. Yeah. So now get back to Kenneth.
Okay, for our dividend stock picks wise, we like companies that can generate a consistent cash flow, like Syscom, MSC Berhad, and also Sunway REIT, as well as Burma's Auto Berhad. All of them may promise potential more than 6% dividend yield, and the potential upside is roughly more than 10%. For the second half topic wise, just a brief elaboration on the companies. For AME Elite Consortium, the group has recorded new sales amounting to close to 110 million. This brings FY24 new sales to close to 300 million, which is a record high. The unbilled sales amounting to 226 million, which are up from 160 million in the prior quarter. Coupled with the outstanding construction and engineering order book of close to 200 million, will likely to sustain their earnings visibly over the next 2 years. The favorable industry outlook will be supported by the strong government-led policies laid out to attract the FDI. We will continue to support growth and investment prospects, particularly within the industrial REIT space. The group has also won a piece of land for the data center related projects as well. The new launches in place will be the new 176 industrial park in Penang that carries a GDV of close to 1 billion in second half of this year, remains well on track to be launched. The group is aiming to replicate their success in the Senai Industrial Park in Johor to the northern region. We have assigned a buy recommendation with a target price of 195 based on 14 times PE pegged to FY25 EPS. Next, we have Matrix Concepts Holdings Berhad. Earnings visibility will be supported by the unbilled sales amounting close to 1.2 billion as at end of FY24 to be recognized over the next about 18 months. Moving forward, the group will be launching several projects that carries a total GDV of 1.65 billion. This was compared to 1.32 billion recorded in FY24. With the potential higher launches, this suggests that the company are also expecting demonstrating optimism of the property sector, especially under their land bank. Their land bank are mostly in Seremban. Other segments growth remains on the pipeline. For the healthcare segment, the group is aiming to increase the number of beds from 67 to 97, given that the current bed, based on the current capacity, the utilization rate is close to 100%. while the education segment are seeing increasing in number of enrollments following the strategic collaboration with Ray Education Group, which rebranded to Educode Matrix Global Schools. We have assigned a buy recommendation with a target price of RM2.14 based on the 20% discount to our RNAV. For QS wise, with new products development and also introduction of manufacturing segment, the company now has greater exposure to semiconductor customers. This is well positioned to benefit from the strong demand recovery in anticipated going forward. With the diverse clientele base spanning from various industries such as semicon, E&E, metal, automotive, and ventures into medical and aerospace industry, the group can mitigate headwinds during downturn in certain sectors. With the management focus onto R&D and a strong capex, the contribution from manufacturing division is expected to grow further over the long run. Since the manufacturing division contributes higher margins than the distribution segment, growth is anticipated to improve QS bottom line. The earnings will likely to be riding onto the recovery in the capex spending from semicon players, leading to strong earnings growth moving forward into second half of this year and FY25. They have reported not very strong numbers in the first half, but we think that in moving to the second half and also next year, we expect a strong earnings recovery. We have assigned a buy recommendation with a target price of 85.5 cents based on a 20 times PE multiple to FY25 numbers. For the logistic players wise, we have Westports Holdings Berhad is a proxy to Malaysia's resilient domestic economy and strong external trade recovery. The group is well positioned to benefit from the anticipated strong growth in external trade and also stable domestic economy. Moving forward, the group is embarking onto a relatively large-scale expansion entailing Westports 2 and also anticipated a tariff hike. The expansion of Westports 2 will significantly increase their capacity, enabling the port to better cater towards the potential rising demand and to fuel growth. Also, the anticipated tariff hikes will likely to take place in the next 2 years, will likely to improve their margins as well. The ECRL development will likely to capture more transshipment throughput from China. ECL is expected to reduce shipping time from Shenzhen to Port Klang from 165 hours to 135 hours. So this will likely to keep the Port Klang busy moving forward.
Good news.
Okay, we are also seeing benefiting. The group may be benefiting from the global supply chain diversion and relocation. Intra-Asia container throughput alone accounts to approximately 65% of the group's total throughput. This positions Westports to capitalize on the rising shipment and gateway traffic expected to increase trade flows due to trade diversion and relocation. We have a buy recommendation with a target price of 5.08 cents based on the DCF valuation using the discount rate of 6%. For our Tasco Berhad, positive earnings growth will be driven by the IBS segment recovery and improved external trade performance. We expect the IBS segment will experience recovery supported by the improved external trade performance in Malaysia. I think in the first half, we did see strong external trade, largely fueled by the recovery in the E&E sector. The domestic wise DBS segment improvement will be from the firm warehouse and CSC demand, a new warehouse and expansion. DBS segment is set to improve due to firm demand from warehouses and cold storage centers. Short-term profit and margin boost from uptick international ocean freight rates. The surge in ocean freight rates, although is not back towards the pandemic levels, we are seeing a strong surge in the freight rates. Freight rates has risen by 80 to close to 100% from the recent bottom. This is due to the Red Sea crisis. We're likely to provide higher margins for ocean freight forwarding business like Tasco. The group has also wide clientele as the group serves various industries. We have a buy recommendation with a target price of RM1.12. For Solar West wise, is a front runner poised to benefit from the government RE initiatives. This is backed by the established track record, having completed 1.2 gigawatt active of RE projects. active participation in government projects consistently secured 20% of EPCC jobs for LSS 1, 2 and 4, and also commands approximately 40% market share in the CNI rooftop solar. The group also offers uniqueness in-house financing solutions under Power West, which allows players the players will not need to fork up upfront fee and maintenance as a key selling point. To date, they have secured close to about 110 megawatt of solar power plant from REPA. The group also has a strong tender book, currently at 6.1 gigawatt. Malaysia accounts to about 2/3 of the capacity, with the remaining capacity supported by overseas project. Key markets on SolarWest will be Taiwan, Indonesia and Brunei, totaling about 1 gigawatt. We have a buy recommendation based on sum of parts valuation with a target price of $1.95. We have assigned EPCC segment to 35 times PE, and solar assets are valued from DCF. And last company for the second half will be Semaiden. It's a specialist in ground-mounted solar PV. Semaiden consistently secured an average of 15.4% of EPCC job flows, boasting a total capacity of close to 400 megawatt. The group was the first in the industry to complete and commercialize one of the LSS4 projects in the Wong Tebal, Penang. The company is not just about solar. Semaiden also involves in bioenergy solutions, particularly in biomass. Biomass projects are more complex and resource intensive. It requires about 11 to 13 million in terms of capex per megawatt. Historically, Semaiden bioenergy projects have achieved expected IRRs of 8 to 12%, which is significantly higher than the single-digit figures for ground-mounted solar projects. The RE portfolio includes 43.3 solar assets under CGPP, 7 megawatt of biomass power plant, 1.2 megawatt of biogas power plant, and 2.2 megawatt of other solar assets, totaling 53.7 megawatt. The group also aims to achieve 10% of their recurring income from the total revenue from 2027 onwards. Semaiden currently boasts an order book valued of close about 350 million. Approximately 60% comes from solar, 30% from biomass, and 10% from other segments, which sum up the recent EPCC project win of KHDP. We have assigned a buy recommendation with a target price of 166 based on SOP valuation. We have pegged EPCC to 30 times PE, while solar assets are derived from DCF valuation metrics.
So what is the current price right now for Semaiden?
For Semaiden, I haven't checked the current price, but I think price have not changed much. Yes, Family have not changed much from our last recommendation. However, for Solar West wise, we did see Solar West has really ramped up by about 10% based on past couple of weeks.
It is 123 right now.
Okay, so there's still some upside, roughly about 20-ish% upside from based on our target price.
About 40 cents though.
Yep.
How long do you think this can be achieved?
Our target price are normally 12 months forward valuation. So if you hold probably 12 months, then probably it can achieve.
Probably the second half of the year we can get it.
Yeah, hopefully, yeah.
So start buying, is it? Can start buying already?
I think you can start buying all the stocks that we have recommended earlier. Yeah.
So it's a buy, call, hold until it's a long-term hold.
Yep.
Okay.
So moving on to the last part of the talk will be the key risks of the under our course or under our recommendation. We think that further strengthening in US dollars may likely to or the weakening of the ringgit against the US dollar, as well as the neighboring country, may likely to deter foreign funds moving into the emerging markets. But with the prospects of US rate cuts, chances of the foreign funds coming into Malaysia will likely to be relatively high. The geopolitical attention, unleashed geopolitical tension in the Middle East, Ukraine, Russia, political instability in Europe may impact investor confidence. There's also the China and US trade war, but I think Malaysia stands as one of the beneficiaries from the trade diversion. inflationary risk with the price of commodities have normalized. The removal of the blanket subsidy, particularly for raw 95, poses a risk to our recommendations, given that goods and services in general may erode consumer purchasing power. But with the introduction of EPF account 3 and also the revision of the civil servants' salary, they were likely to cushion some impact of that. Elevated interest rate, corporate profits may likely to be discounted at higher rates, given that corporates may likely to serve higher in finance income or interest expenses. Scattered signs of economic softening. While global economic growth is still on the cards, we are seeing signs of cracking in the global economic growth. Global economic growth are slowing down right now. That was one of the reasons why US are expecting to reduce their or cut their interest rate moving forward in order to spur the economic growth.
Okay, so thank you for the sharings. So I'm going to ask a few questions because we received quite a numbers of the audience regarding the questions. So first I'm going to ask that how would you think on the plantation issue and the turnover?
For plantation wise, I think that growth may likely to be relatively stagnant at this point of time. CPO price may likely to hover around below the 4,000 per metric ton until we see CPO prices manage to stabilize above the 4,000 per metric ton. Then we can anticipate for further upside to take place. I think Megan will have her own technical view. She will share on it later on. But fundamental wise, we think that it's likely to be very much stable. 3H profiles are still very much healthy across the Malaysia market at this point of time. May likely to continue to support the earnings at this point of time.
Okay, so thanks for the sharings. So this another question. How about for EMS player like CEB, ATEX and EG? Will it break down by the semicons sentiments?
For EMS players wise, I think just now I've shared some consumer-driven semicon players will likely to continue to struggle due to the overcapacity at this point of time. For now, chip makers for phones or for your tablets will likely to try for compared to consumer-driven EMS players. But for ATEC companies like CEB, ATEC and EG, I think that we will continue to see earnings. We will not see like a net losses, but earnings growth will not be exciting at this point of time. But unless they have secured like relatively strong order books, I think recently EG have announced they have secured one of relatively solid order book that may likely to prompt up their earnings. We do not cover EG, so we do not have a in-house target price for EG.
Okay, so thanks for the sharings. So another people is asking about the stocks, which is Ramsos. So how do you think about Ramsos? Even though the share price now is already hit quite high, is it too risky to enter now?
I think we are one of the most bullish in-house research in-house on Ramsos since the past couple of months. We have initiated the company since at a company share price of around the 40-ish cents. Currently it's trading in the span of I think 2 to 3 months, is already trading at the 70-ish cents right now. So it's currently hovering at our our target price at this point of time. So I think it is not risky to trade, given that fundamental growth are still on the cards right now. The group is still on the expansion mode. Should there be more further M&A activities taking shape, or should the company continues to roll out new products or developments, we may revise our earnings numbers moving forward. The company also is scheduling to announce their results towards the end of this month, probably on next week, either 24th of July. So do watch out on their reported earnings. If the company earnings comes above expectations, we may revise our earnings projection accordingly.
Okay, so thanks for the sharings. So another people is asking that how do you foresee the growth company will be start to turn around?
For growth company is currently on the infant stage of turning around at this point of time. Most of the players are already demonstrating positive EBITDA numbers. So I think that recovery process prospects are in the cards at this point of time, but the quantum of the recovery will likely to be very much gradual and also measured, probably until the overcapacity has been numbers have been relatively well absorbed. Then we may be seeing improvement, a stronger improvement in their numbers, potentially moving into the second half of 2025 or even towards 2026.
Okay, so I think we should stop the Q&A for temporary. So if you have further questions, just to type them into the comment box. And so when end of the section, we will just do again our Q&A sections for later sessions. So now I will pass these sections to our Megan to share her derivative technical analysis. So now let's welcome Megan for her sections.
Hi, just to start with, I have more questions for you later. Need some stock pick later, okay? Holding some need your guidance. But anyhow, derivative, we are more to intraday trading, I would say. So this year, our outlook today, I'll make it a bit different compared to what we have done previously. Let's start. This round we have a slogan, earn USD in Malaysia. You know, with inflation, not enough money to use. Okay, salary not growing, so you got to think of your own. So what to do? How to earn USD in Malaysia? Tell later. The agenda, we'll talk about the market outlook for a start. Then after that, I'll tell you where to capture the opportunity and the dollar sign. Where is it? So the last market outlook flashback, the last market outlook was in January with Kenneth, where I was talking about 1005. If let's say the index, the FKI, which is the stock index that we have in KL, so I predicted if let's say market can support above 1005. There is a possibility for market to go further up. So, if let's say the market can go supported above 1005, the market can go further up. So, half a year later, which is today, market actually went to 1637. Can anyone see my mouse?
Yes, can.
Can be seen.
Yes.
Okay, so if let's say you bought at 1005, then you can market right now. Yesterday closing is at 1637. So if half a year before that in January you bought at 1500. So if let's say today market come to 1637 minus 1005 is 137 point, and in FKLI, the KL index, 1 point is 50 ringgit. So if let's say there's a profit of 137 point, that will equals to 6,800. So that will be your profit. With the investment, what kind of investment we're talking about? We're talking about 4,000. There's a minimum deposit in FKLI where you need only 4,000 to invest, and this ROI after half a year you are getting 170% return. This is provided you hold all year long. Don't do any stupid thing, just hold all year long, okay? So second flashback, you will come back to crude palm oil. What happened was back in January we were expecting, well, probably if let's say there's an upside from the market, that time market is going through a contraction. So if let's say there is a breakout, if let's say it's an upside breakout, the support will be 3674. So that was the price, 3674. So what happened half year later, which is today? So this is where the triangle is where we were in January. So now the market closed at 3929. Actually this was on Thursday, but however on Friday it actually went higher up. But however, I just get the price 3929, okay? 3929 minus 3674, there will be 255 points. 1 point equal to 25 ringgit. So if let's say your profit here is 255 point, your ROI, you are talking about 6,000 ringgit return. Where's your investment? The investment that you put in is 7,000. 7,000 minimum deposit. The ROI after half a year is 91%.
Wow,
So-
this is the power of leverage.
Exactly. This is the magic multiplier we're talking about in futures. That's the difference. So the third one, last market outlook, we were talking about gold market as well. So gold market, we are looking for an upside if let's say it can hold above 2061. But however, during that time, it was the record high that we also did not do anything unless it has been supported after that. Then only we dare to buy. Okay, so it actually hovers around the top for quite some time before the shoot up. Okay, what happened after that? My call was 2061 supported, then only we buy. What happened half a year later? So market went to 2468, which is this week. This is what happened. Historical high again. 2468 minus 2061, which we say when it's supported, then only we buy. So 1 point is USD 10, and the profit that we're talking about is 400 point. 1 point is 10 ringgit times 10, so you are getting USD 4,000 in 6 months time. So the investment that you need to put in is USD 1,000. Your ROI is 400%. That is gold. So it's not finished yet. But however, this is where I will bring you after that. Let's go back for our market outlook first. So I'm giving you an idea, like if let's say there's a support resistance we are talking about, because I don't see you every day, so this is for half year kind of thing. So I'll be giving you prices that is important prices to watch out. Anything happen during that time, you got to react yourself. Of course, we have something that can support you. Definitely is our dealer. You can join us as a client. We have dealer to assist you. Secondly, we have AM, PM briefing to help you with your trading decision. So now we just go back to our outlook before we come back to our slide. Okay, we start with FKLI. So FKLI would be the KL stock index. So at the moment, it actually went to 1640. This is the closing on Friday yesterday. So market actually went on a consolidation for quite some time. I think this is the consolidation box that we are looking at. This happened in January. So half a year later, it went to the top of the box. Now market is doing 1640. We are not looking to buy at any price at 1640 because it's too high. But of course, I don't discount upside. Market at any time you can buy or sell. Okay, there's no just one buy call. Okay, you can at up to this point you can buy or sell. But we are looking at the possibility of whether what is worth. At this price, 1640 at this moment, not worth buying because it's too high. When should we buy? If let's say there is a buy call eventually. If let's say market went up, came back down, supported and went up, there's a possibility. You need to support around here, then only our advice for a buy call. If let's say market don't support, just one day shoot down and go up, no, market don't go that way. Buyer will always wait for the opportunity to buy. Buyer won't rush in to buy all the time. It's only seller that will flush down the market. Buyer will always wait for opportunity. They always look and see. So therefore, if let's say a buy call, anything support above, this is an important point to watch. 1617. Anything supported above 1617, now it's 1640. Anything, if let's say they retrace and supported above 1617, is you can try a buy call. But what if when it comes to 1617 and it's a flush down? Don't do any stupid thing. Don't buy if you see a flush down. Okay? If let's say there's a flush down, let it be. Let it come down. How it flush down is very important. So Now, because it's a half yearly thing, like I said, we have AM, PM briefing to help you to make some buy recommendation or sell recommendation throughout the day to help you to decide on these kind of stages. Okay, so do stay tuned for our AM, PM in our Apex Academy. So this will be the buy and sell call for FKLI. But how about another market that is quite famous in Malaysia, which is crude palm oil? Okay, I can tell you crude palm oil is suffering since starting of the year until now. It has been in a contraction, and there is many attempts. Market is resilient to 4,000 level, as what Kenneth said. Anything support above 4,000 only he will be looking at things. Well, same goes to futures. 4,000 level as big. Why is 4,000 level? Because the market actually tried many times. They actually tried 7 times to break through the 4,000 level, and always when market reach that level, there is a flush down. There are always seller waiting for buyer to flush down the market. So 1 time, 2 times, 3 times, 4, 5, 6, 7. The previous round was the 7th time that they tried to break down, but break up. But however, the 7 attempts, only 1 reached through, and it pushed to 4,400, but it couldn't sustain. It came back down. So current market is contracting, as what you can see. Market is contracting. So at this moment, market is not looking at a very bright side, but however, contraction means waiting for a breakthrough. So market is going through a breakthrough. Can you see this hollow vessel? If let's say market could support around here, there is a possibility of market breakthrough, but this is not yet a buy call. Okay, wait for a retrace supported above 4,000, then we have a possibility of coming up here, and the other one 4,400. Market at a broader view is still on a consolidation. The broader view, if let's say market want to go up like what they have done previously, market have to stabilize above 4,400 for a rally, a big rally. Else it will be still within 3,200 to 4,400. It will be still there. But however, few hundred points is enough for us. Intraday compared to last time is not as much movement compared to last time. But however, like we always say, whatever happens, a big wave, before a big wave happens, there's always consolidation and a still market. Until you have lost interest, then only it will come. So okay, let's see whether this will happen. I'm looking for this to happen. But however, there's also downside. If let's say market could not support the last round, it still want to come back to this area, and they could flush down. They could flush down to this level. The purple line here is actually the important support resistance. If let's say this one flushed down like this and rebounded, this is rather a down call already eventually. I'll put it in red. This is possible if let's say this level could not be supported. If let's say they want to go up, 4,000 got to support, then we will be seeing 4,400. So we have the same, I have the same view as Kenneth, as that's what is shown in derivative in CPO. So at the moment, everyone have to suffer a bit until something is visible. So the important point at the moment we are looking at 3756 4030. So at the moment, just do intraday trade. Approach will be hit and run at the moment. Buy or sell doesn't matter, you can do both. It's just a matter of where you buy, where you sell only. Okay, but don't expect too much from the market. Market is no longer like last time, smaller TP. Okay, we just wait for just look for smaller TP and just run away, and we wait for the big wave to come. Okay, whether it's up or down, I don't know. Let the market tell us. Okay, another regional market that you can see, if let's say in the morning you have a lot of time, I can tell you market that you need to go in is Hong Kong market. Why Hong Kong market? Hong Kong market actually look weak at the moment, not showing any sign of super trend yet, but however, something is cooking in the midst of working out for a direction. Reason view, market actually went for an upside and they are doing a correction. Yes, it is below a major resistance, but however, with this buyer here, this uptrend here, if let's say at this price, important point to look at 17,200. If let's say this can be supported, there is a possibility to come back up. How it will come back up? Let's say 17,200 is around here. Okay, it could support this. You will see something pretty. Okay, but if let's say they could not support and went through back down, then so sorry, this could be this way, coming down. Like I say, the market, there's no one way market. There's always two way. So your mindset got to change to where should I sell and where should I buy. It is very important for you to see where is the price now and what should I do. Am I at the advantage? And am I in the advantage? If let's say I'm not, just leave it, look for something else. But however, now is a critical price to watch. 17,200. Okay, so just watch out on this market. If you want to know more about Hang Seng market, do contact us. We can help you. We have foreign trading, mobile trading, and desktop trading for you. Okay, the next market we're looking at crude oil. All-time favorite, Malaysian all-time favorite. Okay, crude palm oil now is looking for a contraction. Very obvious. I love contraction. Why? Because contraction is where you find gems. Oh, the gems. Where is the gem? Okay. The important point to watch is 79. We always see how market break through the 79 because it would show whether it will support or it will break through. So at this moment, whenever there's a contraction, we are waiting for a breakthrough. So at the moment, you only trade within 84 to 75. Important point to see 79. 79 is this line. So what will happen if let's say it's up? If let's say they want to go up, 79 will be supported. Need to support lah, okay? First level here, second level here. Okay, what if this one cannot be supported? If this one cannot be supported, this will happen. So do watch out if let's say market come to 79 and you're asking me what is the price now, is at 78.64, around 79. So please watch market now. It's time for you to look for your dollar sign. Okay, the next one, gold market. This is a super market that you cannot miss. Let me tell you later on what you can look for here. Okay, there will be a big buck here, but however, I'm not going to tell you now. I'm just going to tell you the overview. Okay, so this is where we, let's say January. Okay, here, this price here is where the last market outlook that we had. So market went up. So now, at this point of time, I can tell you that market we lean to upside. Okay, and the important point is very nearby. 2376. 2376 is where you need to see. To me, if let's say this supported, super bull run is in the making. So what will happen? This, if let's say this could be supported this round, there's two ways how they gonna go up, yeah. This one is one way. What is the second way? It could come back down to the consolidation, supported, and go up. This is two way where how market can go up. Okay, so what if this doesn't happen? Yeah, we always have our backup plan. If let's say this doesn't happen, something need to happen. Okay, if it's a sell, this need to come down, this need to rebound, and this couldn't support above, come back down again, go back up. Here would be where we are looking for. If let's say this couldn't happen for a super run, okay, this will be what happened. And if this happened, very likely that we are going back to consolidation. Okay, don't talk about downtrend yet. Okay, we always look at market on the upside, consolidation, then only a downside. Market never go from an upside straight away go to a downside. It never happened that way. Okay, we always look market in that sense. Okay, so this will be gold market. I will tell you where's the dollar. The dollar sign is here, but however later on, I won't tell you now. Next one. Nasdaq, if you compare, market recorded new record high every other day, and I'm trying to short, and I fail. Okay, I admit that I fail. Okay, but however, I cut loss. Definitely, if I'm wrong, I need to cut loss, but worth trying. Why is that so? Because back in 2019, this was the upside. Then after that, COVID came, do a correction. So I measure the upside and I multiply ratio 1 to 1. I multiply the whole box to the low. I just duplicate this box and I'll just paste it here. Okay, so this is the potential box that I'm looking for if let's say there's a rally. So it happens. Okay, so it happens. So at the moment it's actually at the top of my box. I don't know whether this will continue. If let's say this will continue, likely would be here. This will be another level high, a historical high if they really want to come. But however, if this happen, if really there's an end of this rally, what will happen is first thing first, they will show some retrace first. Okay, like I say, always consolidation before a downturn. Don't always just down. No. Okay, we look for a consolidation first. So past 1 week, market actually show a downside. There is a potential, and this is actually a very good sign that support a down. I don't want to tell you what it is, but you just take it as it is a sign. I don't want to tell you now. But however, this is a sign where it's a very good sign that market has a possibility of coming down. At the moment, yesterday, market came to my support, which is 19,700. So likely there is a possibility of a rebound. And where it rebound, and if it's resisted there, where my resistance is, probably here. If let's say it's resisted, there is a possibility for mini downside, but mini also until here, no? It's about 2,000 points. 2,000 more is enough for you not to, cannot become a millionaire lah, okay? But you can earn quite a bit from there lah. So early ang pao for the year or so lah. So this is one of the market that I will be touching on later on. So the important point to watch out, 19725. But if let's say this fail to come down and they want to continue to go up, this will be another price that we are looking at. to 21,670 if let's say this happens. So how would this happen? Well, likely is like that, and like that. Stop a while here, like that. If let's say they want to come down. What if they don't want to come down? They still think that market can go up. You'll be like that, like that, like that, like that. This will be a possible up, because no matter how market went up so much already, so allows some consolidation before an upside. Okay, so this will be the two-way how market gonna run for Nasdaq. So for S&P same like all others, record high every day, seems to hold firm as yet, and with minor correction over the past 2 days. It looks like there's still room for an upside unless some critical support are breached here. Important point to watch is 4963, 5616. At the moment, the price is 5553. So it's not too far from this price. So do some intraday, go back to a smaller time frame, do some charting. You can buy or sell at this stage. Okay, it is not showing a very strong sell as yet, but like I say, any rebound back to 5616 could not support. You can try some selling at this moment. Big seller is not there yet, but however you may try. Like I say, you can always buy or sell in future market. Not necessarily it must be a buy or it must be a sell. There no must be we flag C. Our mindset got to be flag C. The last one, Dow Jones. Dow Jones break out from contraction, showing an upside momentum. Contraction and then upside momentum. And the seller came strong also after the new high, the record high. So at the moment, market came back down. Looks like there's market for Dow Jones is not really ready for a downside yet. It's still possible for a support. Where's the support? There's one here. So it's looking at this area. No firm selling yet. It's only an intraday selling. So you can long, you can buy or short at any time. So this market, I would say, if let's say if they want to go for an upside, they could. If let's say they supported here, they could do some consolidation and continue to go up. They could. But what if they want to come down? If they want to come down, they have to come back down here. Support a while, zoom. Come back again and zoom. This is a possible downside if they really want to come down. But however, looking at it, there's no signal yet. There's still buy is more favorable. So the important point to see is 41,100 and 38,000. So these will be the two prices they're looking at. Okay. So now talk about dollar sign. So when we first begin with our market outlook, we're talking about slogan, earn USD in Malaysia, not enough money. How? Where's the dollar sign? There are a few markets in US. One is gold. Gold in US market is Sharia compliance because it's physical delivery. For Malaysia market, it's not physical delivery, it's a cash settled. So therefore, you can actually try the gold in US market. Secondly is WTI crude oil. So crude oil market, like we showed you just now, it was a contraction. But this one, there's an argument that, okay, of course with the Trump, with the Trump presidency, the previous round, he always tried to suppress crude oil. So if he really become the president, I think there is a high possibility that the crude oil can flush down. he always press down crude oil, but I don't discount it. Like I say, it's a contraction just now. We always look for whether market can support up or cannot support, go down. So we see by then what happened. Okay, but the presidency election was in November, right?
Early November.
Early November. So we still have time. So let's see what happened. Okay, gold market and crude oil. Secondly, stock index, we are looking for Dow Jones and Nasdaq. So before we go to money, you got to learn something first. What is a commodity super cycle? Commodity super cycle happens 10 years once or 20 years once. So it happened once in Malaysia in 2021. So this is the one. Super cycle, meaning a standard period of rising prices for commodity. So this happens in 2007, where market from 1004 shoot up to 4004. This was the first round, where back in 2008 market shoot up for CBO. Second round was during COVID. This is during the presidency of I think that is where Trump failed, where he lose the election, and because of the price war, because he lose, the price war is no longer there. Therefore, the market shoot up. All commodities shoot up. So therefore, from 1,900, market went shoot up to 7,200. This happened in 1 year time. So the shoot up is about 6,000 points. This in my career, I would say not even my career, anyone that is doing crude palm oil has never seen it happen in crude palm oil before. Okay, this is what we call super cycle. And where is the next super cycle? Gold market. I foresee this happening will, I wouldn't say it's possible to happen in gold market. Back in 1980, market from 196 shoot up to 800. So this is about 600 to 700 difference. This after how many years? 40 years. This is a super cycle, but this super cycle has not ended. I wouldn't say they're still extended, because in market there's always wave 1, wave 2, wave 3 to the 5th wave. Okay, so where's my projection? Now it's 2,400. Okay, but my projection, we are looking at 3,100 to 3,300. So this one, you don't have to do a lot of things. Buy and just hold on and wait until this price come. I don't know whether it can happen million A or not, I don't know, but it depends how much you bought. Okay, million A or not, possible for million, because it's in USD. Whatever you put in is times 5, so whatever you convert back from USD is times 5. So I don't know whether the exchange should go to times 12. I hope it won't. I still need to go to US. I hope it won't. But however, let's take an easy calculation, times 5 RM to USD. But at the moment it's 2,400, looking at 3,000, so at least you have about 600 to 1,000 points to project. Give it half a year. So how to calculate the dollar sign? First thing you need to know in futures, what is the magic multiplier? You only need to know the multiplier, you will know how to play futures. So what is a multiplier? Multiplier, it means very easy. 1 point mover is how much? In stock, 1 cent mover, it depends how many you buy, is how much, right? But in futures, how many point move is how much. That is our magic multiplier, our magic number. So for gold, 1 point move is 10 USD. So if let's say you buy at 2376, this is the magic number, the important point that I was telling you. 2376, if let's say this price supported, And if let's say market really come to 3,150, so what is the P&L? 3,150 minus 2,376 equals to 774 points. Move on 1 point, what is the magic number? Is times 10. Dollar sign, 774 points times USD 10 equal to 7,000 USD. When you convert back to Malaysian ringgit, this one I times 4.5 lah, okay? I don't times 5 lah, okay? It's 34,000. So, how to make this 34,000 a difference? Buy how many lot lor? If you want to increase this number, the 34,000, you buy more lots lah. Now I'm talking about 1 lot only. If you buy 10 lots, this one 34,000 is times 10. So it will be 300,000 lah. So what is the investment that we're talking about? Per lot is USD 1,000. Your minimum investment is USD 1,000. As long as your account has USD 1,000, you can hold on to your goal. 1 lot I'm talking about. If you have 2 lot, 2,000. 3 lot, 3,000. Okay? And if it's 1 lot, 34,000. 2 lot is 68,000. 10 lot is 340,000. We're talking about the P&L. Okay? So of course, this is what we project lah. Projection, our vision. Okay, vision haven't come yet, but we always look for gems in the market. So this is something, like I said, futures, there is always risk. Okay, as long as we manage our risk, is okay. We will put our stop loss is very important in future market. Second market in US that I foresee, Nasdaq market. Micro Nasdaq, what's the magic number? 1 point is 2 USD. So if you sell at 20,000 price, the price is 20,000, you buy back at 19,800. So 20,000 minus 19,800 equals to 200 points. 200 points, what is the magic number? 1 point is 2 USD. So 200 points is your earning times USD 2, the magic number, you are getting 400 USD. For Nasdaq market to move 200 points a day is not a problem at all. Okay, if let's say this want to do a correction, Nasdaq market want to do a correction, I'm expecting more than that lah. Okay, but whether it will happen or not, still back to risk management. Okay, still back to the charting. Where is your risk? Where is your R&R ratio? And where are you looking at? Then only we'll talk about R&R, the ROI. Okay, always go for your risk and reward ratio first, then only talk about the ROI. Okay, for Nasdaq, if let's say you buy, there's always risk. If let's say you buy at 19,800 and market did not go up, market went down, okay? So you sold at 19,600, what will happen? 19,600 minus 19,800, you lose 200 points. Magic number, 1 point is 2 USD. What is the P&L? Minus 200 points times USD 2 equals to negative 400. So this is the losses. Therefore, stop loss order is very important in futures. I am not asking you to put stop at 400. I am just maximizing the 400 to let you see this is what will happen if let's say you don't put a stop loss. Stop loss is very important. Therefore, I say what is your risk and reward ratio. Okay, this will make you some buck early ang bao if let's say you can catch it. Okay, if let's say you need us, you need our dealer assistant, we'll have our contact at our live chat. Contact us, sign up with us, and we can assist you from there. So this is just to tell you, if let's say in CPO, what's the magic number? All this you don't have to know. Only the 1 point movement. How much? 1 point is 25 ringgit. So you only need to know the multiplier is 25. Other than that, you come to me, then only I tell you what you need to know. But at the moment, you just need to know the magic number is times 25. Next one, micro Nasdaq, how much is it? Magic number is times 2. What is a micro gold magic number? Is times 10. And what is the magic number in crude oil? Is times 100. 1 point movement is times USD 100. So, well, to assist you in the trading, our support is at your service. We have Apex Academy to assist you. My colleague is very diligently updating our AM, PM briefing on our trading tips. Okay, so in the morning, we will tell you what we see in the morning. Then we will adjust in the afternoon. Whatever that happened in the morning or it haven't happened, we will tell you, should we, maybe you should continue to look at what price, or if let's say whatever you tell in the morning already happened, then we'll have a second plan in the afternoon. So that is our resources to you. It's only offered in Apex. Okay, so of course in Apex Academy we have our product, services and information. Here we also give announcement, promotions and the event, upcoming event that we have. And also we are doing some education part in our Apex Academy as well. And of course I would like to highlight Kenneth actually put a lot of tears and blood into Apex Academy as well. He actually put a lot of his update on his research, what to buy, what to sell, and also he also do briefing every morning at what time?
8 a.m.
8 a.m. In Apex TV as well, right? So he also do his briefing 8 a.m. in the morning to tell you what stock to buy. At this today market outlook is for second half, but however, we will not see you just 6 months in 6 months in a year and bye bye. That's it. No, our support is at your service. We always try to support our client. So therefore, Apex Academy is there at your service. So in the morning, support Kenneth. Go to Apex TV and see what kind of call he's making for intraday or for the week. You know, it depends what kind of trader you are. Intraday trader, you may ask questions to Kenneth and see, you know, what kind of advice that he can give you. If let's say maybe you have stock that you are stuck, maybe he can help you. You know, well, of course, all these are only offered to Apex client. Okay, you got to open the Apex account first. Okay, this is you help me, I help you. Okay. All right. This third one, Telegram. So if let's say you have your mobile right now, you can scan the QR code now. This is our Telegram channel where we combine the equity and also derivative Telegram. You scan it now. At us every day. From Telegram you can see our buy call, sell call. From that, even in the future, if let's say we want to communicate with you, we will put the announcement, event, promotions in our Telegram as well. So if let's say you need some assistance, you can actually go to Telegram and contact us from there as well. We are always trying to help our client and assist our client. So discretionary trading. Discretionary trading is our core business in derivative. What I've been telling you is a part of the business that we always try to promote. I don't agree with just selling our product. I only want our investor to make money. Okay, so if you want to make money, where should you look for? Apex. Definitely, I have to promote myself first, okay. But however, if let's say you have no time to do trading, you only your day is occupied by your work, you have nothing, you can, in the morning work, at night trade Nasdaq at night, you can, okay, we can assist you from that. So at the moment, we are in the midst of preparing for our briefing, the foreign market briefing for you guys as well. So we will only talk about outlook where which market that we are focusing in. We will not focus on all products. We only focus on product that we think is worth. I would say for Malaysian player, we go for micro product because the investment is low. The investment is low and the potential is there. So therefore, always go for micro product. We will tell you where to look for. Okay, come back to discretionary trading. If let's say you have no time at all, I don't know how to do, I don't know how, I don't know how to do chart, never mind. Okay, we have discretionary trading where we have a slogan here, let professional trade for you. So our team, our key strength is discretionary trading, where all my dealers are ready-made trader. Okay, we are not like other firm. We are only a dealer. No, I would say everyone need a skill to survive. My vision is that I hope anyone that is in derivative as our dealer could survive through the lifetime, even after 60 years old, they don't have a job anymore, continue trading. Because after 60 years old, although we don't have to work anymore, but we still need to survive. We still need to survive. We need a skill. We need a skill, meaning that you need to know what to do in your early stage. Prepare for your retirement at this stage. Until when 60 years old come, you know what to do. You have something to do. You don't have to look at TV every day and like Android TV every day. What channel to watch? No, you don't have to. You have an option how to make money. Okay, so our key strength, discretionary trading. Our achievement, we have achieved more than 100% return in 2023. Of course, we also have record before that. Okay, so come and inquire on what is a discretionary trading. It's actually we manage the account for you. So this activity is approved by Bursa, and our core value is we tie our interest with your investment growth, meaning we have no bonus, and our bonus tie with your winning. You have profit, then only we have bonus. If you have no profit, we have no bonus, and we wasted our time too. That's the least thing that we want to do. So this discretionary trading is approved by Bursa, is managed by a team of licensed and experienced trader, and is time saving for the investor. So if let's say you have no time to trade, you don't know how to trade, this is a time saving. You don't have to learn what to trade, how to see, and so, okay? But of course, I do encourage if you want to learn DT product features. We have transparent profit distribution, and our bonus rely on your winning. Like I said just now, our bonus, please, I don't want to waste my time too. So, well, like George Soros always say, I hope everyone knows who is George Soros. If you know Warren Buffett, you're gonna know George Soros as well. He's that old too. So, well, he's a very experienced trader in the market, okay. So, markets are constantly in a state of uncertainty and flux, and money is made by discount the obvious and betting on the unexpected. If let's say market already went up, then only you expect market to go up, it's too late. That's what he meant. You got to, whatever is very obvious is no longer something that you, because everyone is already there. So if let's say it's so obvious already, then where is your room? Where is your room to make 2 times 100%, 200%, 300%? So therefore, you got to have that kind of sense in order for you to make the 200%, 300%, even 700%. How many percentage of profit? We don't talk about that first. We talk about the risk and reward ratio first. If we get 200, 300, and 400 or 700%, we leave it to the market. If the market has that kind of movement and trend, then we talk about that money. If let's say there's none, we don't talk so far, okay? Even 20% per year is good enough. We don't talk about 200% or 100%. 20% or 30% per year, I am telling you are a good trader already. Even in stock market, 30%. Fund management, I think not many fund also can perform about 30%. Unit trust, I don't think so lah, unless during the 2020 where it's possible, where market has to have some good trend, good super run, then only you can get that. Else it's pretty hard for you to get that kind of return. So I would say, let's be realistic. We don't talk about 200%. Let's be realistic of 20-30%. I think it's good enough. If you yourself can generate a 20-30% per year, you are good enough. Okay. So this is our motto. Your wealth is our priority. So your growth define our success. So, well, thank you. This is end of my presentation. Our slogan, let professional trade for you. So if let's say you want to contact anyone in futures, you can contact. This is the number that we have. If you can screenshot on your mobile, contact us, or at our live chat, there's a contact us. Do snapshot and contact us. We'll wait for your call. Thanks. Back to you, Shireen.
Okay, so thanks for the group presentations and sharing from Megan's. So we received few questions regarding on the derivative markets. So that's the first question. So is Hang Seng market more easier to trade if compared with the US market?
Actually, it's two different market because it's two different time zone. Hang Seng market is only active in the morning. Yes, they do run at night too, but however, I don't encourage lah. Okay, we only want to trade. Why do we want to trade excess? We only want to trade when market is favor us. So always have something in mind that we always twist our mindset. We don't make ourselves a tools to the market. Market is our tools to make money, not that we are the tools to the market for them to make money out of us. Okay, so therefore we only trade when market is at their active timing. So meaning Hang Seng, their active timing is 9:15, but however I only encourage you to trade 9:30 onwards. 9:30 onwards, you only spend 2 hours of your time, trade until probably 11 o'clock. Okay, continue with your work. I only need 2 hours from you. After that, you can continue with your work. If you want to know how to do this, let me know. We actually have coming up, we will have market outlook every month to assist you how to do trading. And again, this only is provided to our Apex client. If let's say you're not our client, so sorry. So a bit realistic, or maybe you say it's realistic, but however, nothing is for free. Things that are free is the most expensive thing on earth. Never ask for free thing. Okay, so like I say, if you want us to help you, you got to help us as well, because of course company need to survive, then only we will be there to service you, because whatever things that we assist you, there is a resources cost that we need to spend. So we need you guys to support us so that we can continue to support you. So Hang Seng market will be there, and US market is at night. So if let's say you want to trade US market, don't trade on the daytime. I'm not saying that in the morning US market will not move. They move 23 hours, they move. But however, like I say, we only trade active timing. If let's say US market is only active at night, so we trade at night. So me sacrifice my time. I can tell you I trade US market. So my working hours actually start from early morning Malaysia timing to night 1 to 2 o'clock. Of course, I'm trying to reduce that timing because I need to sleep too. But however, I'm sort of a workaholic. So at the moment, I trade until 1 o'clock at night. I'm trying to reduce it back to 11, but actually you can. I tried some timing to stop at, make it a point to stop at 12 o'clock or 11:30 is doable.
Okay, so thanks for the sharing. So yesterday we happened one incident, which is the CrowdStrike. So we're wondering that is it will affect the futures market on next Monday?
Not really. Why is that? So US market is very unique, is because our futures run 23 hours. So during the CrowdStrike, what happened was at that point of time, market actually flushed down about 100 plus point during the time. So I think the time when it happens is in the afternoon around 3 something,
Yes.
3 something in the afternoon. The market reacted at that point. So if let's say you are looking at the market, you may able to grab it. But if let's say you are not in the market, you are not able to grab it. So in futures, there are no delay effect. There are no delay effect is because they run 28 hours, so they actually flush down during the hours. So at night, if they want to flush down, if you say that you want to react to the COP strike, yes, probably during the opening. Whatever news that we get in the day where US market is sleeping time, what happened is during their opening hour, the market will react to it. Then it will probably take about half an hour time. If let's say there's the market will recover if let's say there's no further news. But if let's say the whole market try to flush down together, that would be different story. But if let's say it's only crowd strike, it will recover quite soon, like what happened yesterday.
Okay, so different market got different sentiments.
Exactly.
Yeah. So last questions for you. So how would you think that the US elections will affect the whole markets?
The election, it depends who wins. Okay. Like I say, my prediction. Okay, if let's say Biden gonna stay, then I would say not much changes. Not much changes in the market policy. There will be a possible continuous upside, unless some bad news that actually happens, something that they can't be balanced. Then it will obstruct the market, if let's say some big news that, let's say the last round was I think during that time was a nuclear bomb in there's a nuclear plant in Japan that actually burst. This is one of the news that can affect market, where that time market came down to 1,000 point in a day. Those news, if let's say you don't have that kind of news, I would foresee if let's say Biden win, market likely to stay in the area or possible an upside, because meaning whatever Biden has been doing, market is like that already. So there is no instrument that or element that will obstruct the market, where if during Biden time it's like that, so it will continue like that lor. Something that he did better, market will go up. But if Trump wins, it will be a total turnaround of the market. Why so? Because back in his old time, when he's in as a president, he always tried to suspect a few things, and whatever he want to do, he always do it overnight. And he's such a unexpected person. He has kind of an unexpected personality. If you want to do it, he will do it. Like his show, you are fired, meaning you are fired. So I think I'll expect market to I don't know whether there will be a rally or not, but however, commodity will not survive, I would say. The last round was a price war that suppressed all the commodities. Crude oil were not doing well. All the commodities are not doing well, and soybean oil is not doing well. It's flat. And I would say another one will be interest rate. Interest rate will come back to negative, I would say. He always have a concept that interest rate in US got to be negative. But after Biden actually came up and the interest rate actually went up, I don't know how would this happen, but however, whenever there is a change in the management in any company, any change in the management, there will be uncertainty. When there's uncertainty, market will have fluctuation. So that's my prediction. After the fluctuation, then we'll see how market react after that. We are always open to the market fluctuation. So uncertainty is good. Uncertainty is very good for gold market.
Wow, okay.
How about Kenneth? Do you have other view in the presidency election?
I think I've shared earlier on the pre and post US presidential election. No matter who holds the White House, we think that post-election wise, generally markets perform relatively well because there is certainty on who is staying in power for the next couple of years. So generally, I think over the past like 8 elections, out of the 8 elections, six times post-election, generally markets has closed in a positive territory. So, but however, in terms of who holds the White House, different parties will likely to see different. We will see different sectors performing positively or negatively depending on who holds the White House power.
Totally agree. So therefore, we watch out lah. So, are we giving some foreign stock tips or not?
Currently, I think we are not covering the foreign markets right now, so we are just focusing on to Malaysia at this point of time.
Okay. So we see there's still time, November. So at the moment there are a lot of happening, like the shooting.
Yeah.
That was quite terrible, I would say. But however, let's see what happened in November.
Yeah.
Okay, so thanks for the sharing from Megan and Kenneth. So there's another just extra 2 questions for just now Kenneth sharings. So there's a person who is asking that will REITs become positive, which is relative to the properties?
I think for REITs, we are largely neutral on the REITs. We favor REITs that have exposure in retail malls. For example, like Pavilion REIT, Sunway REIT, IGB REIT. For REITs that are heavy onto office spaces, we are not in favor on that, given that the occupancy rate remains relatively weak. There's an influx of new office spaces that are coming in the next couple of months or even the next couple of quarters. So rental rates will remain likely to be suppressed at this kind of time.
Okay, so how about just back to your just now Malaysia's stock picks. So what are the top 3 picks growing stocks among all your recommendations?
I only have 8 recommendations earlier on out of 1,000 stocks listed on Bursa Malaysia. If I were to choose 3 companies, I would say I would be favoring Matrix Concepts Holdings Berhad due to their earnings resiliency. They are paying approximately 40% of their net profit as dividend based on the last close at the end of the first half. Their dividend yield is at 5.6%. We also like Westports Holdings Berhad. They are embarking on their relatively aggressive expansion plans. Their share prices has gone up quite a bit since the over the past about 1 month trading period. We also like Solaris Holdings Berhad, one of the largest renewable energy player listed on Bursa Malaysia at this point of time. The group will be leveraging onto their expertise in the RE sector onto multiple projects such as the CGPP, LSS programs.
Okay, so that's a very good sharing. So just one last question before we end these sections. So what is the one undervalued Malaysian stocks that we should be looking and why?
Undervalued Malaysian stocks. I think a lot of stocks are still undervalued in our view, given that we still have a lot of potential upsides. Although the FMPLCI has already gone up towards the 1630 level, we think that upsides are still prevalent at this point of time. For if we were to choose just maybe one stocks, I think a lot of stocks has really ran up. If you look at Bursa Malaysia's market cap, it has surpassed the 2 trillion market cap for the first time in history. That was during in end of April or early May. And if you track back just a few weeks back, the market cap of Bursa Malaysia has risen to 2.1 trillion. So a lot of stocks has run up to their near their fundamental values. But if you were to say like undervalued company, I think Optimax would be one of the undervalued preferred choice at this point of time. Their share price is currently at around the 60-ish cents. Our target price is around the 80-ish cents. representing a potential upside of about 30 or plus percent.
Okay, so you are recommended Optimax stocks.
Yes, I think they have also signed a MOU with the Ministry of Health or Ministry of Education to provide eye checkup for students in Malaysia yesterday.
Okay.
So I think that would be one of the key avenue of earning sustainability for Optimax as well.
Okay, so thank you for the good sharings from both from both speakers. So now we are going to end this section. So before I end, so you can just connect with us now on Facebook or YouTube by searching Apex Securities and Telegram by searching Apex eTrades. So to like and subscribe our page if you haven't. So we will consistently update our event promotions, announcement and market news. So our recorded videos will be uploaded on our YouTube channels too. So if you have any inquiries, please do not hesitate to contact us even through calls, emails, website, live chat on Facebook messengers. So our representative will contact you as soon as possible. So thank you for your joinings and have a good weekend.
Alright, thank
Okay.
you.
Thank
Thank
you.
you. Bye bye.